And welcome back. One of the nation's largest home builders released their first quarter earnings report yesterday. In this report, they stated or they announced a huge decrease of new home sales compared to 1 year ago, as well as a huge rise in buyer cancellations. And because of that, Lennar had to offer more incentives to home buyers in order to drive home sales. Lennar also identified the U.S. markets that have been most impacted by this housing market slowdown, and I'll share those cities in today's video as well. So let's go ahead and dive right in. Of course, I have a lot to share in today's video. This again is based on Q1 of 2023 for Lennar's earnings report here. And for Q1, this actually covers December, January, as well as February this year. That's Q1 for Lennar, just announced on March 15th this year. According to Lennar, the quarter started in December with traffic and home sales stalled, only moving with incentives and price adjustments. So they only got new home sales based on offering more incentives for home buyers and more price adjustments. They entered January with interest rates declining and energizing customers. They closed out February, though, with rates once again rising and challenging consumer confidence. Traffic was slowing. To me, it makes sense that buyer traffic was slowing down for them in February, given the fact that rates were increasing so much. So on February 1st, rates were hovering around 6%. The end of the month at around 7%, a 1% increase in rates in about 1 month. They also said the past couple of weeks have added new issues and questions that are reflective of a market that's looking for a bottom and looking for stability. They talk about the Fed increasing rates, and there's no way to see around corners and anticipate with certainty what will come next. I will have to say there's a lot of uncertainty in the market right now, given the fallout of two banks, Silicon Valley, as well as Signature Bank as well. So this is really creating a lot of volatility in the marketplace. And of course, rates have been absolutely all over the place over the past couple of months. Lennar also provided their buyer cancellation rate for the quarter. Before I share that, I want to provide some context as well, because in Q1 of 2022, which was announced in March of 2022, their cancellation rate for home buyers was 10%. In Q2 of 2022, their cancellation rate increased to 11.8%. Then in Q3, their cancellation rate more than doubled from the previous quarter. It increased to 21%. From 11.8% the previous quarter. Then in Q4 of 2022, their cancellation rate increased once again to 26%. Now enter Q1 this year. Their cancellation rate in Q1 this year was 22%. This means their cancellation rate has more than doubled compared to 1 year ago, going from about 10%, now it's approximately 22%. They also said here that while this is higher than last year's 10.2% rate from 1 year ago, it's decidedly lower than the 26% last quarter and has been falling in each consecutive month. However, though, new orders or new home sales were down 10% year over year. They also touched on inventory levels as well, which I have some additional insights to provide. It says, on a positive note, very limited new home inventory exists. It also says here they have limited existing housing supply as well. So this is two different issues here. So for existing houses, when comparing inventory levels today compared to last year, as well as the year before that, we're at very high levels. So approximately 60 to around 70% more existing houses for sale right now compared to years past couple of years. So post-COVID, we're at very low levels, or very high levels, I should say. But when looking at pre-COVID levels for existing houses, we're still at very low levels, historically speaking. A low number of houses for sale, even though we have far more houses for sale over the past couple of years. However, though, regarding new housing inventory, take a look at this. This is again according to our good friend Uncle Fred, and the source here is the U.S. Census Bureau. So here is brand new single-family houses for sale in the U.S. I know I'm not talking about Lennar, but I'm talking about for the U.S. as a whole, brand new single-family houses that are technically for sale. So on a seasonally adjusted basis for January, which is the most recent month we have according to the U.S. Census Bureau, there was 439,000 single-family houses for sale in the U.S. Now, this is down compared to October when there was 466,000. But when you actually widen this out to right here, going back more or less to 2004, the current levels right now at 439,000. When looking at levels pre-COVID, you have to go all the way back until right here, May of 2008. Back then, there was 451,000 new houses for sale. So the current levels we have right now at 439, we're at the highest levels pre-COVID going back to May of 2008. Again, I know I'm not comparing apples to apples. I'm not talking about just Lennar here, but overall across the United States, the highest levels going back to 2008 when looking at pre-COVID levels. Going back to the report here, they touched on land acquisitions as well. It says, we recognized early that land would be expensive relative to reducing prices, and we therefore stopped the bleeding early. While we reconsidered every land deal in our pipeline, we have walked from deposits or renegotiated terms and prices. So in other words, they're recognizing that the housing market, it's not as hot as it was 1 year ago. Therefore, they're scrutinizing every land deal that they're getting in contract with. And on top of that, for the land deals they are in contract on or were in contract, they have walked away from some of those deposits and also have renegotiated the terms and prices of those land purchase agreements. Lennar also announced here the overall housing market has continued to be impacted by higher rates, which has impacted affordability and homebuyer confidence. While some of our markets are performing well, in most of our markets, we've had to adjust prices, increase incentives, and or provide mortgage rate buydowns. This would actually be an excellent opportunity for me to provide an example for home buyers looking to buy a brand new home today compared to 1 year ago. So take a look at this. This is on the Mortgage News Daily's website. A lot of people ask the website I use for looking at comparisons of housing payments here. So for 1 year ago, and also compared to right now, which by the way, here are home prices or the median sold price in the US for brand new single family houses. So the price right now, or for January this year compared to January last year, more or less flat. So for this year, the median sold price is at $427,500. 1 year ago, it was $430,500. Again, this is based on data from the U.S. Census Bureau. So home prices relatively flat compared to 1 year ago for brand new houses. Also, rates compared to 1 year ago have increased by 2.13 percentage points, going from 6.55% today, which is the 15th of March, an increase from the 4.42% that we saw 1 year ago. So here is the increase in your average monthly housing payment for people looking to buy a brand new home. So $430,000 purchase, putting 5% down at a 4.4% rate 1 year ago, your housing payment, which would be principal and interest only, would be $2,045 per month. Now fast forward to today, approximately $430,000, putting 5% down again, the same purchase price as 1 year ago approximately. The new rate at 6.55%, your new housing payment would be $2,595 per month. And by my dumb math, that's a $550 increase per month to buy that same house today versus 1 year ago. And that equates to a 27% increase in your average monthly housing payment. So when Lennar's talking about here regarding the increase in rates, which is causing a housing affordability issue here, it makes sense they had to adjust prices and or increase incentives in order to drive home sales from home buyers. Lennar also provided the markets in which have been most impacted as well as least impacted by this housing market slowdown here. It says here they have three categories. Category 1, markets that are performing well. Category 2, markets in which they have to adjust prices and incentives in order to drive home sales. And category number 3, they have to require additional pricing adjustments and incentives in order to increase home sales. It says, while our strategy has resulted in lower gross margins across the platform, in other words, offering more incentives, which is causing their gross margin to decrease, the good news is that for now, we have no Category 3 markets. Again, Category 3 requiring additional price adjustments and incentives to increase sales. So no Category 3 markets for Q1 this year. I also want to provide some context because last quarter, which is Q4 of 2022, they actually had, 8 markets in which they had Category 3 markets. Those markets were Orlando, Pensacola, Florida, Northern Alabama, Austin, Texas, Phoenix, Utah, Reno, as well as Portland, Oregon. This again is Q4 of 2022, the previous quarter, 8 markets that had Category 3 marking, whereas this quarter, no Category 3 markets. So let's talk about Category 1 first here. It says during the first quarter and so far in March, again, first quarter is December, January, and February, we had 10 markets that are performing well. This is Southeast Florida, Southwest Florida, Tampa, Palm Atlantic, New Jersey, Philly, Charlotte, Coastal Carolinas, Indy, and San Diego. According to them, all these markets are benefiting from extremely low inventory, and many are benefiting from strong local economy, employment growth, and migration. They've had to selectively offer mortgage buy-down programs and normalize sales incentives, and in some cases, price adjustments, but those are in rare case. So that's Category 1 markets. Let's have a look at Category 2. This again is more significant adjustments that are needed. And that includes 29 markets, which is right here, Jacksonville, Orlando, Gulf Coast, Northern Alabama, Atlanta, Raleigh, Chicago, Minnesota, Nashville, all markets in Texas, so every single market in Texas, including Austin, Phoenix, Tucson, Las Vegas, and also the rest of California, which, by the way, the rest of California would be, I believe, any other market besides San Diego. These Category 2 markets also include Portland and Seattle, Utah, Reno, and Boise. Lennar had to offer more aggressive financing programs, base price reductions, and/or increase incentives in order to regain sales momentum. They also mentioned that in some of these Category 2 markets, it says to avoid buyer cancellations, we've had to adjust pricing on our houses as well. And again, adjusting means to decrease their asking prices of their houses, of course. They also provide some insights regarding construction costs as well, because they say here that year over year, construction costs actually increased by almost 13%, an increase of 13% of construction costs compared to 1 year ago. However, having said this, they're seeing reduction in lumber costs from last summer. And let me share that with you guys right now. I'm going to be sharing lumber future prices, which doesn't mean, of course, prices you see at Home Depot or other lumber yards, but looking at lumber future prices, look at this. This is compared to 1 year ago. So 1 year ago, the price for lumber futures was about $1,420. Now it's $347. This is a decrease of about 75.6% in lumber futures prices compared to 12 months ago. Also, when zooming this out over the past 3 years to go back more or less just before the onset of COVID right now, lumber future prices decreased by 4.69%. So lumber future prices are more or less on par with pre-COVID levels right now. Additionally, when looking at lumber futures prices year to date, they're down approximately 10.37%. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button and subscribe. I appreciate you guys watching this video. Of course, I appreciate you guys in general for supporting my YouTube channel. Hope you guys have an awesome day and look forward to seeing you on the next video.